I just would build on a conversation that Mr. Clay had, and this was, Mr. Ellis, in your testimony, you meant that you said that masking subsidies with lower rates prevents policyholders from understanding their true level of risk. Is my understanding correct that under the current program, policyholders just see the premium payment that they need to make, right?
That's my understanding, yes.
That's
yes,
what they can see. How difficult would it be to break out the subsidy? How difficult would it be to make transparent the amount that the government or, you know, the other taxpayers are covering on behalf of the homeowner?
One of the challenges will be is for many of the policies that get the grandfather, the subsidized rate, the pre-flood insurance rate map policies, they don't actually know the elevation of the actual policy, and so then there's some of the challenges in dealing with that. But I think that's something to be worth doing, especially considering, as you know, we've recommended that anything going forward, if we're trying to do affordability issues, that the subsidy or whatever the support be means tested and be outside the rate structure. And so I think it would be a valuable effort, Congressman Royce.
Well, it seems to me that you could, if you can capture the information, that the increased transparency there would have a positive impact on future decision making, because it would probably, you know, decrease moral hazard. It would increase mitigation efforts, perhaps. But letting the policyholder understand that up front would be helpful. And my other point was the Flood Insurance Program Act of 2012 attempted to address the issue of repetitive loss priorities. And this is where multiple claims have been made on the same property. So the GAO found that while these properties amount to 1% of policies, they account for 40% of all of the program claim losses. Do you think the 2012 reform bill gave the NFIP the tools necessary to address high-risk, repetitive loss properties, and what else could be done there?
Sure, Congressman Royce. Certainly in Bigger Waters 2012, they had the provision there about increasing rates for severe repetitive loss properties. That did not get changed in the subsequent legislation, so that is still going on, and so we think that is a positive step. But I think that also looking at some of the programs that FEMA already has to actually, they have the ICC program with like a $30,000 cap, and you could potentially increase that cap on trying to help people elevate or mitigate or relocate. And so I think there are things that we should be targeting our resources, because as you pointed out, Congressman, it is such a drain on the program that those are the most likely, the most beneficial, the best investment to try to mitigate or relocate them out of the floodplain.
And I think if people understand better the risks they were taking, or the likelihood, and if all of that data may, well, let's hear some of the other perspectives on that issue, if I could just open it up.
I agree. I think we need to indicate what the actual rate is. We need to be actual rated policies. The challenge is, like Mr. Ellis had said, unless we have the elevation certificate, and not all properties, your pre-firm properties, your older structures, your properties are in the BC Next zones, which again we need to remember that 25% of all claims come out of your low to moderate risk properties, the BC Next areas. We don't have the elevation data. Without that elevation data, we can get an idea, and come April 2016, FEMA is implementing clear, concise information to the policyholder. But again, not having that elevation is an impediment to it.